So hi everyone, my name is Jordan and we are back and continuing with our series with chart patterns. So in this video we are going to be looking at the rectangles. So the rectangles, they occur when the price gets locked in a trading range, and they are also continuation signals, and they look like what you're seeing on the screen right here. Okay. So the price is moving maybe in a clear uptrend. Then after some time, the price gets locked in a range whereby it creates a level of resistance and a level of resistance. So after some time, the price will break the level of resistance, okay, and then come to retest under that level and then also continue. Or sometimes if the price is on a clear uptrend, then after creating this short-term consolidation, it will just break through it without coming back to retest. Okay, so sometimes this trading range takes a long time. For example, it could take a long time, and then sometimes the the consolidation, the such short-term consolidation, is wide enough to be tradable, and then sometimes it is not tradable. It is just a series of candles. Okay. This rectangle pattern can be traded in three major ways. We can trade it as support and resistance, we can trade it as a breakout, or we can trade it as a break and retest. So for example, when you look here, we had a price coming from a clear downtrend, and then after some time the price gets locked in a trading range. Then after it broke, it retests, and then we continue. So this is what we call the triangle chart pattern. When you join the support level and the resistance levels, they create what we call a rectangle. So let us move on and then see how we can be able to trade this rectangle. So you can see right here that here the rectangle was small, okay, like the level of support and resistance were nearer, and while when you look here you can see that the level of support and resistance were far apart. So here it becomes tradable, but this one becomes non-tradable. And if you're going to trade this one, we trade it just like support and resistance levels in consolidations. If you didn't watch my previous videos, you can go back and watch them and then come back to this one. So the rectangles look like this on in drawings. So here you can see the price is coming from a clear uptrend. Then after it gets locked in a trading range, after which it breaks, then retests and then continues. Or sometimes it's coming from a clear uptrend. After this short-term consolidation, it can just break through it without coming back to retest, or the retest can occur at a very later time. So if it is on a downtrend, still the same thing happens. Price locks in a range, and then after it breaks and then retests, and then it continues downwards. So rectangles are majorly continuation signals. So it is very difficult to say that on a clear uptrend, you're going to create a rectangle on the top. No, those are very rare cases. So after rectangles, we just expect that the price is going to break and then retest, and then it continues in its major trend. So when you look at this screen, we are going to be looking at how to trade the breakout strategy. So when you look at the chart, so for example right here, you can see that the price was on a clear uptrend. Then after some time, it came to break down to create a downtrend. So when you try to create this downtrend, the price got locked into this range right here, and then after which it broke through. So it never came back to retest on that level, but it just continued. So in the breakout strategy, what we do is that we look at this candle here, which closes entirely out of the rectangle. This is our rectangle, which was drawn. So we look at this candle, this tiny blue candle, because it's one which has broken out of the zone completely. So you wait for a rectangle to be formed. After a rectangle has been formed, we wait for a candle that entirely closes out of this rectangle. So that is the breakout candle. So you put here your, if it is a downtrend, you put here your sell stop order and then wait to catch the wave down. So for the stop loss, it will be above the rectangle or 1.5 of the ATR indicator. So if this was an uptrend, okay, so for example, if here we had an uptrend, for example, right here, if you have an uptrend, and then here we get our rectangle, so we are expecting that the price will come to break out of this rectangle. When it breaks out, wait for a candle that closes entirely out of this rectangle, then you put your buy stop order, and then you target the next level of resistance. So you can see that right here we have a downtrend being formed. And then after this short-term consolidation, it helps us to make our rectangle chart pattern. After this rectangle has been broken by this red candle, we can see that this candle is on which closed entirely out of the rectangle. So you put here your sell stop order, and then the stop loss is above or is 1.5 of the ATR indicator, and then you can be able to catch the wave down. Okay, so that is how we trade the breakout strategy. We have been talking about this breakout strategy in so many different videos. So it is as simple as that. So you can see that here on this chart, right here, you could also be able to draw rectangle, though it was one which was going to become quite wide. That one, and then right here. So you could see that here you could construct a rectangle. After this rectangle has been broken here and then retested, you can see that right here it has been broken, then retested. So this was our buy stop order. Then our stop loss could be 1.5 of the ATR indicator, and then we could be waiting to get a wave up. But you can see that after this, it was not successful. So when the price goes and then comes back, you just have to exit that trade and then wait for another one. So this one here did not work. And then on top of that, it was not a confirmed rectangle, because you can see that the price is on a clear downtrend, and then for us we are trying to catch our wave up. Yet what we are expecting is the price to break out and then test on that level, and then we can go down. So you can see that right here, if we were to make a trade, we would have waited for, you see, breakout, then test. So after this bearish candle here, this one here, we would have put our sell stop order. You don't enter the market at the current market price. So after this sell stop order is not triggered, you can see that the market goes back to breakout and then change to look like this was something else. Maybe a triple bottom, but it doesn't also look to be a triple bottom. So that is how we trade the breakout strategy. Once again, to re-echo, you wait for the price to be on a clear trend. Sometimes when it is on a clear trend, it will create a short-term consolidation, which will help you to construct your rectangle. After constructing your rectangle, you wait for the price to break out. When the price breaks out, we wait for the candle which closes entirely out of this rectangle zone, and then we put a buy stop order and then be able to catch the wave up. So if it is on a clear downtrend, okay, or even if it's not a clear downtrend, if you can see that there is a change in trend, for example, right here, you can see that we are having a continuation into this previous trend. So irrespective of this market trying to change here. So when the price moves, it gets locked in a trading range. Then you construct your rectangle chart pattern. You wait for a candle which closes entirely out of this rectangle, then put your sell stop order, and then you wait to catch the wave down. So the stop loss, you know how we do our stop losses on this channel. So we are going to be looking at how to trade the rectangle, how to trade it with support and resistance. So you can see that right here, for example, on this chart, you can see that we have this pattern which we could be able to lock in as a rectangle here. But irrespective of that, we also have this one. It can help us to train a little. So you can see here that the price is coming from a clear what? A clear downtrend. We have some series of lows and highs. So after here, the price gets locked in a range. So what happens here is that here, when during the downtrend, when we are trading, we can trade the break and retest strategy whereby the price makes a wave down and then a wave up, then a wave down, then a wave up, a wave down, then a wave up, wave down, wave up, wave down, wave up, then wave down. So we can all say that right here we can trade something. We can say that when the price makes a wave down, it goes to make a wave up. And then when it is coming back, it breaks the previous level of support, and then it comes to retest on that level. So when it makes a new swing low, it comes to break this previous level of support, and then it creates a new resistance. So it comes, it breaks this level of support, creates a new resistance. It comes and then breaks until it breaks this pattern. For example, it would come, instead of testing on this level of support, just breaks through it. So here we can see that the price has come out of this and it is retesting on this level. So when it comes to retest on this level, we expect it to come and make a new wave down, which is far away from right here. Okay, so for example, it could come and close here, then comes retest, then continues retest, and then continues. But that didn't happen. Okay, so you can see that right here we have this. So here we expect that the price has found resistance on this level, so it is going to come down and then either stop at this level to create a double bottom, or to create another chart pattern, okay, or to break through it and continue into its pattern. So it's at this level here that we wait for a candlestick pattern, this level of resistance. This is where we find our, this is where we, right here, this is where we wait for a candlestick pattern and then be able to make a new trade, a short trade. So you can see after this move up here, we have a candlestick pattern. We have three black cross, 1, 2, and then 3. We have 3 black cross, so you could put a short trade out from there and then be able to catch some small pips. So you can see that after that, the price comes and then it fails to break through it. It goes, creates a new level of support. So this new level of support is where we expect that price is going to go back and then hit on this level. So here wait for a candlestick pattern which shows a change in trend. And then here you can see that we have some dodges. And then here we have this, it is followed up by a strong bullish candle. So you could put a buy from there and then wait to catch the wave up. So for support and resistance, you can see that here we have a resistance, and then here we have a resistance, and then here we are expecting the price to come back down, okay, after hitting this resistance. So when the price hits that resistance, wait for a candlestick pattern, but you can see that out all here we have no candlestick pattern. So you do not make any trade here. But when we come down to this level of support, we wait for a candlestick pattern once again, and then you can see that here we have the 3 white soldiers. These are 3 stable bullish candles, so you could put your buy trade here and then catch some wave up. And when the price reached here on this level of resistance, you can see that even here it found resistance, and then it created what we call bearish engulfing. So you could put your short trade here and then you catch a wave up to here. So for the rest of that, support and resistance is over because it has broken out of this rectangle. Okay, so what you do here, you wait for a breakout strategy. You can see that this candle closes entirely out of the rectangle, so you could put a short trade here, then you put a stop loss, and then be able to catch a wave down up to this level of support. So in recap, in support and resistance, what happens is that the price would be on a clear downtrend. So if the trading range is wide enough, that is when we can trade the support and resistance. If the trading range is not wide enough, then we do not trade the support and resistance. So when price comes back to retest on this previous level of support to become resistance, we wait for a candlestick pattern. After a candlestick pattern has been formed, we make a short trade. When the price comes and fails to break this level of support, we wait for a candlestick pattern and then we catch a new wave up. So when the price reaches this level, okay, and then it fails to break through it, to create a candlestick pattern which is bearish, then we could make a trade up to this level. Still the same thing, candlestick pattern here, and then until it breaks out of that rectangle, and then retest, and then we could make a short trade. So we can wait for a retest, or we can just enter direct with a breakout. So that is how we can trade with support and resistance on the rectangles. So the next strategy is what we call the breakout and then retest strategy. So, or what we call the break and retest. So on the break and retest strategy, we wait for the rectangle to be broken and then retested. So if the price is on a clear uptrend, so for example, clear uptrend, and then we get our rectangle pattern. If this is our rectangle constructed, we wait for the price to break out of the rectangle. We wait until it comes to retest on this level, and then we can be able to make a trade from that level. So you can see it that right here we had a downtrend, okay, and then the price got locked in a range. So after the price is locked in a range, we constructed our rectangle, after which it was broken right here and then retested. So after the retest, wait for a candlestick pattern so we could make our short trade from here and then put our stop loss. And then our target would be coming from here up to here, minimum. So this was our minimum target. But then you can see that the price still after that is still created some zigzag price movement, but in the long run, it is coming our way. So when the price is going to go into your way, it will not come in a straight fashion like this sometimes, but in most cases it can come, then create some short-term consolidations, and then keep moving into the direction you want. So that is what is happening here. After the breakout, we waited for a retest here. So this is where we made our short trade from, and then our stop loss, and then we are waiting for the price to come and reach this level. If it doesn't, and then it still breaks out of this level here, which has been a support, so now it is holding as a resistance. If this resistance is broken, you have to exit that trade. So forex trading, there are always losses, so which are normal. So in recap, for break and retest, we wait for the price to come and then create a rectangle. After the price creates a rectangle, we wait for the breakout of the rectangle, then a retest on it, and then we can be able to make an entry. If it is a short trade, still the same thing. We wait for the rectangle to be formed. After the rectangle has been broken, you wait for its retest, and then you make a short trade. So thank you so much for watching this video. Do not forget to subscribe to the channel for support and for more videos like this. I will see you in the next video. Bye bye.